is gonna impact the currency market. That is why really you guys trade, and we all most of the time do, even though we can take position in gold, silver, all those places, oil. But most of the time, but most of us, what we are, they are currency traders. So this is Cooper in the Monthly chart, say 1988, like I say, and assuming that there is a new low below here, you can see a high, a low, a high, a low, and a high. So that takes you to the position when you know that at least 5 swings at minimum the market is gonna correct this move right here in case there is a double six house, something like that. So this telling me this is a huge setup, and it looks like in my eyes like 2008 right here. You guys see it? Look, it was on a straight line in 2008. What happened with the market is, you know what happened with the market. So Cooper is telling me, Cooper is called in the investment world Dr. Cooper, because many people believe that how Cooper does the world economic or the global economy is going to do. Now, if we put on top of the Cooper, in Cooper right here, we have two scenarios. Either it's going to correct this whole things, or it's going to correct only this leg. Either way, as a minimum target, is something around here. Now, when you put the S&P chart on top of Cooper, you guys gonna see, let's go weekly. You guys gonna see the correlation there. Look, lower S&P, lower Cooper, almost the same structure here. The only difference is that the S&P didn't make a new high like Cooper did. But well, Cooper can be doing a flat from here. He can be doing A, B, C, A, B, C, and going down sharp right now. But the message is that this decline in Cooper is very strong, and that's a warning because a big money see these things. Big money trades an overall market when everything is correlated. So what is the clear structure in my view is the S&P. When we know that the S&P, if you put it at, and you contract it a bit right here, you see the correlation, higher S&P, higher Cooper top right here. Maybe Cooper did a flat, because if you do and invest things right here, I cannot trace FIBO on this chart. So this is the 1.236 of this one. So maybe it's a flat, and it's gonna run pretty hard to the downside. That's gonna take S&P lowers, as we know. Now let's take the Cooper chart out. Let's add the dollar chart to that things right there, and we're gonna see how they trade invest. In other words, when the dollar trade lower, S&P and Cooper trade higher. Same right here, dollar lower, dollar higher, they trade lower. And then right here, dollar lower, they recover higher. So you can see the inverse correlation between those metals together with the dollar. So technically, lower S&P, lower Cooper. And let me add now oil to the chart. Oil is the red one. You see lower oil, higher dollar. Higher low oil, lower dollar. So technically speaking, these three on the top, they are well related. And if you take, let's take the dollar and put oil with Cooper. Yeah, yeah, we're gonna put it now. You're gonna see how well related they are. Look, it looks like it's the same chart. Now, now, you're gonna see now how oil, let's take the Cooper, we're gonna play the correlation so you guys understand where we're coming from. Look, S&P with oil, peak, it looks like it's the same chart. Don't you guys see it? Look, it looks very well correlated. Sometimes they're gonna lose the correlation, but the high frequency traded machine comes around, the more correlated they are. So, technically speaking, the message is very simple. We see an oil that needs to drop to around $20 a barrel. We see an S&P that is going to drop to around 400 points. We see Cooper lower, so that give you only 1 ounce, guys. The dollar is going to get strong. Now, let's get into the currency pairs related with this metals index. And then let's start with the dollar CAD and Cooper. Look, sorry, let me see if I can change the color of the dollar CAD because the soft, I don't know if you guys can see right there the CAD with the yellow. Let me put it with this. Look, very simple right there. The higher Cooper, of course, the dollar CAD trade lower. Look, the top right here, look how Cooper recovered, how dollar CAD recovered, because what is recovering is the Canadian dollar. You guys see it? So technically, look, lower, right here, the trade that didn't correlate very well in some degrees. But well, technically speaking, there is an inverse correlation right there. When you see they shouldn't run to the same side, both of them. Now, that's with the CAD. Then, if we take the CAD, we take Cooper and we put the dollar, what is dollar? With the CAD, like we always say. What you mean, top? Yeah, what we always say. They are well correlated. In other words, whatever the dollar move does, you're going to see it's like a one chart on top of the other. Yeah, one chart, one top of the other. So seeing the dollar lagging, because remember, the euro is not moving that strong yet. That's why you see the lagging. But what is very clear is that the trend on the dollar is to the upside. Now, let's put Cooper back. And then, this is Cooper. Let's put the Aussie on it. And you guys, the Aussie dollar, you guys gonna get surprised. This is the daily. We do a lot of correlation, guys, because you have to do correlation in order to be a successful trader. Look, this is Aussie. Look at the chart. It's amazing. Look, it's the same chart. When you trade Aussie, you can say that you're trading Cooper, as DB is being said all over. Now, what I want to get with this is that these pairs, metals like Aussie, New Zealand, and dollar CAD, they're leading the dollar strength, which means that don't get fooled with any recovery. It needs to be any drop in the dollar, it needs to be bought because the dollar is going to get a strength. It's going to go strong, and you guys can see the structure. Look, this is the Aussie in the daily. Let me put on the monthly. Look, it's the same charge. I only got the Aussie from right here because they're using the gain. I only got, but it's the same chart. So what you're expecting in Aussie is a keep dropping. Now, what I'm trying to do is going to the 8-hour in the Aussie and the Cooper. And you see in that DV, right? You cannot see the charts because it's one on top of the other. So what I mean is trying to locate the where we are in the market. We see that Cooper. Now we're gonna go with the Cooper, and we're gonna do this. We're gonna take the Aussie, and we're gonna put the candles on it. Hey, 1 second. Because these correlation charts, they're good, but they're tricky. And then we're gonna open it a little bit, and we see in Cooper, all we care now is from here. We see a clear 5 ways, a recovery that looks exactly like that. If you told me that chart in without laboring or nothing, I would say it's the Aussie chart. So you see the recovery here to the 50%, and then you see that extension. It looks like he is still within wave 3. Now, Aussie is lagging a little bit and going, let me open it a little more. From here, you see the next 1, 2, 1, 2, 1, 2. And then it looks like Cooper is right here now in the correction from here. So at least you're going to get 1, 2, 3, 3 more lows in Cooper, which is telling me that we're going to have 3 more lows in the 3 more lows on Aussie. It's telling me that we're going to have 3 more highs in the dollar cat, and it's telling me that we're going to have more dollar strength before we get into wave 2. Now, it's very easy when you take in consideration the metals pairs. That's why out of the 3 proposal pairs that we have on the market right now, 2 of them, they are in metals. Why? Because they are very clear, at least in my eyes, as an Elliott wave. If you put the RSI here, this is on the, the thing is that I cannot put it right here because we're going to go to the dollar pair, because the dollar is the main pair on the chart. But it's telling me that either he's doing a 3-way move, which is possible, and then that being the case, he's going to go, he needs to end this move, because remember, if you take a look at the daily chart and the weekly in Cooper, he doesn't need to drop in 5 ways. It's very powerful. It looks like it's gonna be a 5-way move. Look at last week. Oh, this is monthly. Look at this month. That's a wave 3, guys, most of the times. So the downside is there, that the metals won't allow the dollar to get that much weak. That's why the big correction in the dollar won't happen until you see the metal ending 5 ways, most likely from here. That's the message that I want you guys to get. When you see 1, 2, 3, 4, and 5 is when you're gonna say, okay, here we go. We're gonna get a big move on the euro, and that's why. What you mean? This is 2008 right here. You mean that it looks like this one, like here? Yeah, he needs. That's what I say. I'm not looking for 5 ways, Isaac. I don't want to get that far. What I know is that from here we need more downside. You follow me? Because there is a nest. So that's what I say, that we need at least 3 more moves to the downside before a recovery. Now, getting back to your point right there, which is a pretty good, we go to, let's go to the oil. Because oil can be here, the one showing the real face. Oil, if you go in the daily, the recovery looks correctly. And what I'm expecting in oil is A, B, Z, W, A, B, C, Y. So oil needs to trade below this low to complete 1, 2, 3, 4, 5, 6, 7 swings, which means that a recovery is going to happen. That's what I say. Cooper do not need to do 5 ways. He can do a 3-way like he did, and Isaac pointed out, in 2008, and from there he can do a recovery. Now, if we put the S&P on top of all this, together with oil and Cooper, we're gonna see this. Cooper is the candlestick. You see the S&P that you can see 1, 2, 3, 4, and a possible 5 swing. That's what I say. If it's a nest, it's gonna go lower. Oil is not supporting the nest and the S&P. Oil is supporting 1, 2, 3, 4, 5, and then 3 backs. You follow me, guys? That's why maybe Cooper is doing a 3 ways and then he's gonna do a 3 ways back. Because I see the recovery in Cooper correctly in some degrees. Hi, Tony. So oil is telling me that a recovery in risk is gonna happen. That's what oil is telling me. And that's something that we're gonna cover when we get to the euro dollar, because I want you guys to understand where I'm coming from. But I want you guys to understand what I mean. If you take, let's put it this way. If I take the S&P, let's say I take Cooper and I take the S&P out. S&P create an extension. S&P being the green, oil be the red. What oil is telling me from the top is 1, 2, 3, 4, 5, 6, and it's gonna be a 7 ways. After 7 ways, we should get at least an 8 or a 9, or we should get 3 backs in corrective. Oil needs to get to $20 a barrel. The way do not need to be a 5-way move. Can be in 3. So what I mean is, seeing oil, I would say that oil after 64 right here is gonna get here and it's gonna get a set off. What S&P is telling me, 1, 2, 3, 4, 5, send a sharp, and it's gonna get a set off. I don't know if you guys are trying to understand. I'm trying to correlate everything to get the overall trend of the market. Now, Cooper do not need to make 5 ways. At least, but I know that there is more downside in Cooper, the same way there is more downside in Aussie, the same way that there is more downside in New Zealand and more upside in the oil. So trade the 4 ways that we're doing it, and we're going to make a ton of money right there. But overall, that's what it looks like the market is going on. And then this recovery here should be the S-way DV on the euro dollar. The biggest recovery that should happen soon in the euro dollar in some degrees from around 129, 130 area. As you and me, we are expecting there. So that's you know what I'm coming from. That's what I see on the market after incorporating Cooper on the whole things right here. I see these things happen, but before anything happen in some degrees, I want to see oil to around 64 before getting back to around 90 and 100. Now, the dollar, how we incorporate the dollar things to all this? Very simple. If we put the dollar in top of this, look, the dollar, oil, S&P lower means dollar higher. But at the same way that the oil needs to get 64 or lower before ending the three-way move down, the dollar got more outside. And there is something, guys, I want to show you guys. Now that I see the charge, I don't forget about it. You want to know how, and DB knows me for a while. He knows that sometimes, I don't know you guys, I use the clothesline to get away. DB knows that. Look the nest in the clotheslines as clear as the water. 1, 2, and 3, no new high, new low, 1, 2, 1, 1, 2. No. You see the nest right there, right? It's very clear. 1, 2, 1, 2, 1, 2. That's how I came out with that idea that ugly count that we at one moment was very ugly, now it looks very nice. But you see, DV, what I mean, right? You remember a long ago that the euro was very ugly, and I told you I got discount because of the clothesline. Remember that? It was about a year ago. That's how people forgot about the closing. Sometimes you get many ounces to your counts using the closing lines. And this is very clear right here. So, according to my count, we have 1, 2, possible 3, 4, and 5. That's what I mean. And then maybe this is 1, 2, 3, 4, 5. Anyway, it's going to be a correction. Exactly. Anyway, it's going to be a correction soon in the dollar. The dollar is going to get weak pretty soon. And after that, we're going to see another leg higher in dollar because there is a possibility, even though I'm labeling this as part of this one, like a 1, 2, 3, 4, 5, no matter if it's the correction of this leg from here or the correction from here, this week we should be dollar winners in some degrees. Maybe after Tuesday, Wednesday, we should be dollar winners in the dollar because that's what they charge. We're going to go to that charge right now, Isaac. Give me 1 second. Okay, so that's the dollar. Now, let's move on to the real charge of the dollar with laboring on it. But you guys, you see very clear, guys, where we stand with the metals. The metals, they have more downside, but they're entering now in a phase when they are in the 4-5 wave that there is nothing wrong with trading those. We can make a lot of money. But I think that last week we saw the wave 3 of 3 on the metals. And all we comes now is going to be, it looks like the metals are trading, they're leading the dollar higher, but the euro dollar hasn't get yet. I mean, because the euro as a group is on the bullish phase, in my opinion. Now, let's take a look to these charts. This is the real dollar chart. We're laboring on it. What I was meaning is I got 1, 2, 1, 2, 1, 2. It looks like better 3, 4 being this the 38 or 2 of this, but also these two lows are very close. No, the metals are leading, in my opinion, the rest of the pairs. Yeah, that's possible. Yeah, that's true. That's true. Like like the metals like catching now. Uh, that's why you see a bigger set off in the metals. But the euro, and then everyone is gonna get in sync from the seaways. That's when the S&P is gonna drop big. That's what also is gonna do the seaway down, and we're gonna go over now when we get to the individual pairs. Now, this is the dollar. It looks like this is the 261A of this move, but if you take the FIBO from here, it's also the 1.61A to the pit. You see, Isaac? So, right there is a bigger question. It is done. It is this. 1, 2, 3, 4, 5, and we are in 3 already. Are we creating a leading diagonal? Who knows? All we know is that the strength is in favor of the dollar. We're laboring like this. 1, 2, 1, 2, 3, 4, 5. But it can be the case 1, 2, 3, 4, 5. But the message is I see a dollar weakness this coming week. At least in my eyes, and I hope you guys do too, it's very clear. I see a dollar weakness this week. This move, this high right here is the 1.618 of this, and it's the 261A of this. So if overlap right here at 76 and change, which one? 1, 2, 3, 4, and 5? This one, Isa, is this one. 1, 2, 3, 4, and 5. Or you want what would you like this to be? How it is right here, or being wave 3 here? I mean, the counts, guys, always, because the nest always gonna give you consolidate. Always gonna give you this type of things because every law is very close right here. That's why the figures they're gonna play in together scenario. Now, let's not worry about it now. The 2 at 76. I don't get it. You told me later. All right. So no matter what it is, what you need to worry is for this. You need to look at the euro dollar. At the dollar index only in this part, and then to do that, you go very small right here, and then you're gonna see from here what it looks to be 1, 2, 3, 4, and ideally he's gonna get to 75, 42 area when it's gonna be 5 equals 1. Now, let me make a point here. No either one of 3 were extended. So don't get surprised to see an extended 5. But still, in the case The thing is that still this can be a flat, but the recovery from the lows, it looks very weak. It doesn't look like an impulse, in my view. And if it's a flat, you're gonna need. Look, this is let's put it in 30 minutes with a like. This is what you get. You get 1, 2, 3, 4, 5, 6, 7. 1 second. 1, 2, 3, 4. You need a 5, a 6. You got 7 swing from the top when the mirrors can be a triangle, something like that. So the recovery from here looks corrective, and that's why we have an order of selling the euro dollar to get the final leg. But the next high in the dollar should be a temporary high that should lead this pair to a higher recovery. Now, let me make a point. The Aussie, New Zealand, and CAD, they all need more downside. So I'm questioning the idea that if that strength or weakness in the metals would allow the dollar to get a bigger correction at this stage. Saying that, don't get surprised to see an extended and greeting those type of extended wave fights on the dollar being the case that not even 1 and 2 and sorry 1 or 3 they are extending within the wave 5 can be an ending diagonal type of things right here, something like that, but it can get a little extended because neither this one or this one they are extending in the dollar within the wave 5. And I see Aussie that needs to get, believe me guys, to 80, 89 before a significant bounce. And I see CAD 105, 106 before a significant bounce. You guys follow me? What I mean with that, DV, Isa, all you guys? That's possible. Get an extended 5 right here on the dollar. But I know for the fact that the cycle is ending. As we get back right here, this is the 8-hour, and we put the RSI on it. In some degrees, yes. Look, we have already divergency in the dollar. Yeah, but I mean 105. I mean 105 in the first leg. Because the cat, I'm going to show you the cat. The cat can have also, yeah, it's a gap to the upside on the euro. The cat can also, is a nest from the bottom. I'm going to show you that later. Now, in the 8-hour, all this is coming from with divergency. So that's what I keep saying, guys. The dollar can get into a big a weakness this coming week. That's all I can say about the dollar. Now, let me get back to the other signal and get into the individual pairs. Euro now is trading at 39, 35.40, guys. And that's good. If it's gapping out, that's good because that's confirming the 136 area that we like to sell it there. But also it's not gapping out that much. One second. I've been telling that I don't see the euro doing a triangle. For me, it's a double zigzag that should end at 36.04. That's why we're selling it right there. 1 second. There we go. We're going to start with the dollar here on the weekly chart. And I'm going to answer your question right here, Isaac, that you say about the targets. Okay, I did it on the daily. 1 second. Ideally, the dollar should do something like this. Ideally, should be 1, 2, 1, 2, and then 1, 2, 3, 4, ending 3 right now, a 4, a 5. Figure-wise, I want to mention to you guys this. That's the 161A of the first leg right there. And you can also make the case that what is ending here, what ended here is the wave 3. If no, the dollar should go higher. But also, if you're laboring from here, is the 2% at the high right there. But do not overstay, guys, this idea yet. Something like this, a decline here, and another way. I mean, all you have, I want you guys this. All you have on the dollar, there are 3 waves from the lows. 1, 2, 3 waves. You need a 4 and a 5 to call the bottom 100%. You guys follow me, right? Now, that's for the dollar. Now, the euro dollar, now, this is my preferred account. I gotta be honest with you. Right now it's trading, if you guys see, 35.45. That's my preferred account. I see a lot of, I keep saying since Friday, I said just telling me also the same thing today, that I see a lot of similar between this leg right here compared to what is happening here. You guys see it? I see a lot of things right there. Maybe we ending, but also, even I don't like it that much, it makes a lot of sense also. 1, 2, 3, 4, 5. Do not matter. Whatever it is, it's going to trade higher to around this area. Whatever it is, it's going to trade higher to around that area. I was thinking this idea, we are around the equal legs from here. 1, 2, 3. And also can be the case, guys, I want you to be honest, can be the case. All depends of the S&P oil. I see more downside still. The reason being is that this looks extremely correctly right here. And a big recovery to around this area, 140, 139, should go strong like it did right here. Is not the case yet. So, getting back to the 1 hour on the euro dollar, this is what I see after the weekend. This is my preferred account. Look, I see that he did 1, 2, 3, 1, 2, 3, 1, 2, and 3. That should take the euro dollar to around 136 area. Ideally 136 area, 136.20 before dropping out. That's why it's gapping out today. The structure in the short time frame from the lows At least in my eyes, it looks one, two, three, four, five, six, seven swing. Then from there, you can go, you're gonna see now these two, they are almost equal there. And then if you measure from here, they're perfect. So because this can be a flat. When you have one, two, three, four, five, A, B, C, and a flat, something like that. But this is corrective. This is completely corrected here. And then you get three backs to the 76.4. And then, in my eyes, this is what it is. That he's going to look for 35.88 or 36 area before dropping to around 32.83, which is the area that I like. I love that area. Why? Because it's the 618 of the first leg right here. I like, in the case of the euro, I'm mentioning this because at the end of the day, it's the same. If it's a five-way swing, 618 of 1-3 comes at 32.83. That's what I like that area. Also, if it's an ABC, 618 of 8 comes at 618. No, because it's a leading diagonal. What do you mean equal legs? These two, yeah, they're equal. You know that I'm in favor of a flat until I see the recover. I was calling the flat or weak. These two, they're equals. These two, they're equals. And also, if that's the case, look, and it goes to 36, the 618 of 1-3 comes around the same 32 area. Now, the question, Ryan, as you say, is doesn't recover enter the, yeah, doesn't matter. In the ending diagonal, wave 4 can overlap wave 1. Yeah, it can get to equal legs. Yes, exactly. It can, this is what you mean? Yeah, it can get lower to 128, 129. But the extension right here, unless it's tag, it needs to be nesting then. But remember, this layer right here, that's why all can get into an extended Wi-Fi. It can back. Remember, I want you guys to keep this in mind. I'm in favoring of an extended move on the dollar within Wi-Fi. Exactly. Because it didn't get extension. And the biggest point is that Aussie, New Zealand, and CAD, they all need more up, downside or winnings, in other words. And then if you're gonna correlate the whole things, that's calling for an extension in the wave in the euro dollar. So that can be the case. Something like this right here. This is Ryan. I know you. This is what I mean with the diagonal. You see, like right here, you got 1, 2, 3, a 4 enter the 1, and then drop. That's what we are referring here. That we say that it looks like this right here. It looks like this. That being the case, that's favoring the scenario. Yeah, I think ideally the biggest correction on the euro. You know what, guys? Forget about the euro, please. Let's follow the clear structure, which is oil. Oil is the clearest at all. Oil needs When you see oil around 64, you're going to start saying, Isaac, uh-oh, bounce is about to happen. You need to see S&P making a new low. So until that moment, let's go with an extension on the 5 and see if that extension on the 5 gets to 129, and then the euro is going to recover higher. You know what I mean? I don't want to run the market before I work. Also, RSI is giving divergency. So I know that the bounce is coming sooner or later. Uh, Now also is gapping out big time. I mean, so the idea is that we're ending a move on the dollar. We don't know the extension of the final target, but it can happen. I see, if you notice, the three trades that we have proposed in the right there on the servers, they are all dollar long. It's because I still see more dollar strength. But I know it's terminal. I know it's getting to the end. But the structure in the recovery from the risk still looks corrective to me. That's why we're doing it. And I have a clear Cooper, Aussie, New Zealand, and CAD telling me more weakness on the dollar. So that's telling me dollar index extension, and that's telling me euro dollar possible extension to the downside. You guys understand? Now, let's move on to Aussie as a pair. Aussie is trading 98.40 as a state right now. And discount looks perfect. It looks like one, two, one, two, one, two, three, four. And it looks like, and I keep saying, that's what we're waiting at 99. I believe that the whole war is waiting for 99.20 area. NDV, the whole war is there. That's what I like. I like 99 lower. 99 should be 101.80 on the CAD, 136 on the euro. From there, I see a series of 3 or 4, 5. This is another one, Isa. This one can be A. These two can be B. Right? That being the case, also can be doing an ADC from the top like Cooper and like oil. Now, what happened is no matter what it is, I don't care about these two already. All I care about is resolving that nest right here. And the nest is telling me that I need one, two, at least I need 3 more lows or 2 more lows in ounce before we see any type of significant strength. That's how I see it. Equal legs right here should come around this area. Wait, I have the figure already in place. It comes the ones I see 99, 95, 96 area very significant because it's the 1.618 of these two, which is the next net in place, some degrees, and also I think it's the equal legs from here, which is around the Zen area. If you take a look, that's about the Zen area right there. So we should get the end of 1, 2, 3, 4, 5 from there. Is the 1618 or this one. We should get another bounce and another low. So, and then we should get another bounce and another low that most likely comes to the 1618 or the first leg that comes around 89, 88 area. That's why I say 89. Now, that's for Aussie. Guys, the master of Aussie is DB. He knows Aussie pretty well. Now, the cat, what is telling me? Same scenario. We got 1, 2, 1, 2, 1, 2. We're gonna start buying. No, you don't. You do. We're gonna start buying it around the 3802 here for a possible again one another high. Is gonna end around 105. That should be. I'm sorry, I said it wrong. 105 should be around 96 an ounce. Now, after that, it's gonna get back, and then it comes the correction from here. I say 1, 2. The same is the same path. We're gonna be buying. We're gonna be buying a lot of selling, buying a lot of dollar cat. I'm selling a lot of dollar Aussie all week because it's very clear, at least in my eyes. You guys agree, right? Now, those two is telling me that I don't see most likely the dollar getting into a big correction until this move ended. That's why I see an extended wave fight in the dollar. You guys, I mean, Elliott waves, unless it's an ending diagonal, most of the times you're always gonna get one of the three imports is gonna be extended. In this case, we didn't get it in the dollar index, and I see it happening in this because, like I say, it's very clear the way it's structured in this pair. Look, in the cat, there is no single pit of divergence. The same with Aussie. What that's telling me is that thing is gonna go higher. You guys, because not even from here you see divergence. So it needs more outside. Now the S&P, and then we're gonna open for questions. S&P, this is what we like we've been saying, either 1, 2, 1, 2, or we got a nest. I'm sorry, that's a nest. Or we got 1, 2, 3, 4, and 5. I was noticing over the weekend, because guys, sometimes during the week, I got so many things in my mind that I missed a lot of details. 1 second. If you take a look at the weekly, this right here looks very similar to this. Very similar to here. You see it? Very similar. So when I see S&P to a new low, that should happen around 1070, 1021 of in extension, 1065. If I see oil, which is the clear one of all, around 64, S&P 1065, CAT around 108, 109, Aussie 89, 88, I'm gonna say, the risk is gonna bounce pretty hard. Noticing I didn't mention the euro because the counts on the euro is not as clear as, and then that's my question to everyone. Why trade in the euro dollar when you can make a ton of money with the clear counts like the CAT and the Aussie and New Zealand? It's the same pit. You're gonna make the same money. So that's what I see with the S&P. I'm inclining more now in the 1, 2, 3, 4, 5, something similar to this, a recovery, and then the setup. That's why I'm trying to see it right now as a possible scenario. Now, finally, let's go to the New Zealand. And New Zealand have I know that DV is being in the same boat. We're trying to figure out how, because I see from here 1, 2, 3 swing. See, how it can be so bearish or bullish on the CAD, bearish on the Aussie, bearish S&P, and I see New Zealand with this structure here. And then this can be a flat when you can have one, two, three, one, two, three, five, and then your A wave is, and then this is no B. Let me see if I can get it because I figured it out yesterday. You looking for the B wave now instead of for the higher degree. In other words, this right here becomes A. Let's put it like this. Forget about the labeling, the degrees now. I want to make something different. When this is A and then this is B, and then you got A, B, and then you're going lower in 5 ways in New Zealand. And that way you don't needs to be at 5, and then you get from the lows 1, 2, 3, 4, something like that. Yeah, we haven't covered pounds yet. All right, so that goes better with the decline. You see in a DV, that goes much better with the decline that we are expecting in metals in some degree, even though still the recovery that we're expecting after 5 can take it higher than ounce and everything. The final confirmation to discount is the taking of 71. So that's an alternative that we're playing a little bit with it. Like we have A, B, and then this is going to be very strong to the downside because you need to break most likely below 49. Think about it. So now let's go to cable. Cable also is gapping out today. This is cable on the daily. I see people already calling the end of the D wave. Can be the case. I see nice swing from the lows, but now if it makes another, that's going to be 11 swing, which is corrective. So, but still, the area that I like to go long cable is 152.01, which is the 618 of the C wave. The low that we have last week is 53.29. And if you take a look at cable on the 1 hour chart, you see it's gapping out. The gap out today in risk, it goes pretty well with what we're expecting. I still like discount. I still like 1, 2, 3, 4, and now with the new high that we're getting today, we're gonna get 11 swing around the 38 or 2. I will sell it with a target of, let's say, 5 equals 1 around 152, which is the 618 of the C wave. You guys know what I mean, right? So that's for cable. Now, this week we start covering another pair, which is very nice pair. Is the Singapore dollar. You guys see right here, and this is the weekly chart. Very trending pair, very nice to trade. When you see from here, most important and everything, you put the RSI. That's what we put in 3. Look, the low here, and then you see that even this legs right here comes with divergency. So maybe we end a big move right here, and we're going higher in favor of the dollar. This week, this pair did a huge move higher, also confirming the dollar swing. We take a look here. The low comes around the 618 and also, I believe it was, I don't remember, around the 1.618 of, I see 5 swings here going back in this pair on the dailies. Guys, dollar is gonna get strong, but remember, always remember, no bias. There is no straight line. No straight line. This is on the dailies. From the top, it looks like 1, 2, 3, flat 4, and 1, 2, 3, 4, 5. I see a well-defined structure there. I see that he broke about the declining channel there, and then I'm getting to my point, which is look at the 4-hour chart. From here, also it looks 1, 2, 1, 2, then 3, 4, 5. It looks like it's doing an extended wave 5. There is divergence in saying here. So this is telling me also that dollar weakness is around the corner. The 4.236 is 133. And also I see this right here. You see 1, 2 to the 1.618. Now we are around the 3802 with one more high coming to this area lower. It's a very, very nice pair to trade. Follow Elliott weights, as you see right there. I mean, everything follow Elliott weight. So, but I like it. 10 Ryan to recommend it. I like it. We're going to start covering on the daily basics. Right here, this is the 1 hour. You see it? 1, 2, 3, 4, 5, 1, 2, 3. Again, no extension in wave 3 at all. Well, went to the 1618. I'm sorry, this one went, and now we are in the we are right here at the 3802. It looks bullish. This looks 1, 2, 3, 4, 5. That worried me a little bit, but it can be a flat because I remember I believe in the recovery here. You see, it did 1, 2, 3, 4, 5 swing from the top. It looks right here. Look, very nice short entry right there at the 618. So I like this pair. I want to see. I'm following it very close because this is the only dollar pair that show 5 swings from the top. The only one that show 5 swings. 1, 2, 3, 4, 5 swings. So ideally, maybe it's in the ending diagonal. Ideally, it's gonna get to 128. So keep that in mind. The 5 swing from the top. Now, question, guys. Any pair that we have covered that you guys want to show, go over any pair that you want me to explain. Okay, Aussie. Aussie, very simple. 1, 2, 1, 2, 1, 2, 3, 4. Now trading at 98.53. We are waiting at 99. Euro is at 35.60. I mean, so yeah, What you mean? Right here, this area, I got 1, 2, 1, 2, 1, 2. The worst case scenario in Nazi is this one, guys. 1, 2, 3, 4, and then extend the wave 5. But at least one more low you need in that case. And then, exactly. That's the worst case scenario that goes pretty well with the Singapore dollar. Singapore dollar, believe me, is a breast. Because, I mean, in some degrees, it's showing it's another dollar pair that you can take a look at it. You know what I mean? Now, look, that's the alternative, the most bullish alternative. 1, 2, the one that we were presenting all over. 1, 2, 3, 4, and then an extended 5. 1, 2, 3, 4. But I don't care about it. I know that one more low is coming. The decline from the lows is 1, 2, 3 waves. It looks like it did 1, 2, 3, 1, 2, 3. This is a 5. That if you take it, look, this is it. I'm gonna correct the expanded flat because this is much better. You mentioned here, it went to the 1.618 on the lows, no even reach the 1.236 or 5, which is telling me that it's a B wave flat, and then you got 1, 2, 3, 3 in the flat to confuse anybody, everyone, and then you need one more 3 to the upside. Idea target should be around 98.28, 99 area. If you go from there, if you go from here, 98, 95. Those are the ideal levels right there. The gap out is telling me what? It's telling me that at the end of the day, it's going to be closed. Yeah, that can be the case. I'm thinking about it. Let's say we got about 2 hours away. Probably we're going to take the first entry at the opening and announce it. Same with the euro. It can be an ABC, Rafi. We mentioned that at the beginning, but no matter what it is, I see 96 tradable in ounces. That's the equal leg. Exactly. Why are you going to trade the euro if you got a clear structure in ounces? And even the cat. Not necessary. That's a confuse. Not necessary, Rafi. If you look at ounces only, yeah, you can say that an ABC is a new high. No. Correction no always are ABC. This can be an A because oil is saying it goes lower. Cooper is saying it goes lower. S&P is going lower. So I don't see Aussie making a new high. Now this can be W, 3 backs and another decline, and going on and on and on. Don't worry about it. You are about how many picks for the high DV and Aussie? What do you mean something isn't around? I don't care, Rafi. This is the way that a trader should see the market. From the top to the bottom to the low announcing. How many picks? I mean, a trader, exactly. A trader should never outrun the market. All I care now is, yeah, exactly. But what cable should do after rezone? Should get back in 3. Aussie came back in 3. S&P in 3. Oil in 3. everything is going to, euro in 3, everything is going to be 3 weeks back. And then you're going to see another leg down. Technically, do not think about weekly and daily counts now. Think about jumping an ounce to the short side around 99, 98, 82 and make 300 pips. And then you stay upside, you let the bounce happen. If the bounce come out in 5, then you buy the C-way. And if it goes to new high, good for Rafi. If it goes to equal legs, good for Rafi. Don't run the market. Because most of the times, when you start thinking, even myself, everyone, we start thinking, too big, guess what? 99% of the times we're wrong. That's something that I don't get about trades. Concentrate in what is clear. No, because I don't know what I say that. I mean, no, because he's saying that Aussie is going to go to a new high. And I say, I don't see it. For me, I don't even care. Yes, I don't even care if it goes to a new high or not. What I care is about getting here and make 300 picks and see how it bounces. I don't care. I never care. I don't care if the euro goes to 1 or goes to 2. I don't care. I care about what I see, a clear stroke so that I can trade with a defined risk. That's how you should see it. That's the way it should be. No, I mean, forget about Rafi. Let's get a 99 lower, and then we worry. Listen, I was 95% sure that the euro was to go to in a flat to 152. Not even me. My good friend Gordon was in national TV saying that because it was clear. In 2009, everyone, including 2010, nobody, everyone can say 118.74 in the euro was the bottom. You know, it cost me almost 100 grand that trade. About 80 grand that trade. Because I remember everyone was waiting for 112 in 2010 in June. And then it started recovering. And guess what? It went to 149, my friend. Market always going to prove you most of the time, exactly. Market love to prove you wrong. So that's why I discovered my setups and I don't run the market. I take 200 picks a week and I live with it. Because sometimes dreams or make those big conclusions, most of the times we're wrong. I try to correlate it, Rafi, in that way you got a better picture. I mean, I see a clear structure that I need one more high in CAD, one more low in Aussie, maybe one more low in Euro, maybe one more low in even pound. That's all I care right now. Get those peaks that are there in front of me. After, let's see, let's wait. We all were on Wednesday. Everyone was kind of shaky. Big moon news, market all over the place. Guess what? Thursday morning, it was clear again. It's like always is the peace after the storm. Markets that are always the same. If you start thinking, I mean, that's the way I trade. I mean, and like I always say, I can show my results. They are public. And if I can make 3,000 picks in the market where 95% of the traders lose the money every day, it's because I do something right. I'm public picks. That's a big difference. Because many times I close position and I stay with it. Many times I take picks that I don't trades that I don't even mention there. But you need to have that type of set mind in order to be successful in these trades. Otherwise, they're gonna take your money. That's why they are there, taking your money. That's why my good friend Louis there placed the other day the money in motion. These people are crazy. How you gonna send trade to retail traders with 300, 400 pick stop loss? Of course, they're gonna get big swing. I can even sell the euro. Let's say when the euro was around 148, 149, everyone knew that was stopping. I can go there and sell it. I put my stop loss on 160. Everyone can do that. And do you know why they're doing it like that? Because they don't want to lose bad. Because they don't have what it takes to put in a stop loss of 50 pips. Because they know they're going to be wrong more than right. Because they are not that good, in my opinion. And the only one that is good there, the one to show their face, which is Gordon. They are fund manager. Fund manager trade big. It's a different animal. But most of the clients are retailers. So any question, guys, about any pair? But again, I see one more low. It's on the service, Rafi. Everything is on the service. The tray on the house is on the service. Follow that tray right there. Conclusion, guys. I see one more low on the dollar minimum. After, we're going to worry about the counts in ounce, CAD, all that type of things. But at least one more high in the dollar should happen. Like always, after the high, you stay out. You wait for the recovery. If the recovery proves you're wrong, you're wrong. If the recovery proves you corrective, then you start buying again the dollar. If the recovery proves impulse, you set the dollar for the seaway. Because keep in mind, the dollar is here for a stay. There is 99.9% of 72.40 is the low in the dollar. I don't see a why no. But remember also, guys, the S&P needs one more low around 1,070 and oil needs 64. So you got in a scenario when you're looking for an extended wave $5 on the dollar, but you have also in a scenario when possible one more low is all you need. So don't run the market. Let's wait. When the new low happen, you take your profit and you see what's going on. If it's come back corrective again, it's like the euro. Look, I'm going to put it simple, and this is for the new guys right there, because I know that the old ones, they already know how to do this. Look, I'm going to put my position here. What Eric was saying when the world was coming to the end right here on Wednesday. I say, is that flat? And then you guys going to kill me. But I see a flat. Yes or no? I keep doing my flat things. Equal legs. Guess what? When I saw here the recovery, don't you guys know how I changed the account? Automatically. I didn't mention the flat anymore. And I changed my account. Why? Because the data is talking. And this is corrective. This has the look of an ending diagonal. I don't care. I can be here long risk here, and guess what? Right here, I want to set the euro around when the market open most likely. Now, a question. If you have a clear Aussie, yeah, you see that? You see that, Louis? They were saying they should do a lie detective to those people. They mentioned in the program about 4 times that the world is coming to the end. And I bet you that most of them, they're going to start buying the risk. Guarantee you that. Remember, guys, in this in this business, no one is your friend. Think about it. One of the reasons that we started doing the service, of course, we got paid for the service, is because, I mean, in some degrees, it's amazing what this band does with the retail traders. It's amazing how they take the money out of people. Out of the 95% of the retail traders that lose the money. How you gonna say, when you see a national TV saying the war's coming to the end, that's telling me be a contrarian. Be a contrarian. I don't listen to the war's coming to the end. And in my mind is risk is coming up. Risk is coming up. Because that's how it is, guys. That's how it is. It's been proven all over. But I see that the recovery in risk should prove corrective, and I see more downside in risk when the real war is coming to the end. It's gonna get ugly, guys. Keep saying that. It's gonna get ugly pretty soon. The Fed on Wednesday showed one thing. They're running out of tools. In my view, I know most of my fundamental opinions, and DV is there and asking DV, what do they say? Because I don't pay attention to those news. I don't care about it. DV is there. DV can tell you he was the one that explained it to me. Because I follow my charge, nothing else. I cannot trust money motion, but I trust what I see right there on my chart. There is a say that say, trade what you see, not what you hear. Something like that. So for me, what I see is maybe one more letdown in risk aversion, and then I'm gonna be on the sidelines 24 hours. If the recovery in risk, no, we're gonna look and go now. Good, I forgot about it. I'm sorry. Good point. The recovery in risk looks corrective. I buy. Now let's take a look at gold. Because of the move last week, we play a little bit with the count. Most likely it's the same. But this is what we got. This is a weekly charge in gold when still there is divergence, I believe, against here, which is the 3 of 3. But within wave 5, this is my higher rate on the RSI. Now, this is telling me that we ended at the top, wave 3 of 3. Guys, follow me? Now, if we take a look at the figures, the high is the 3.236 to the peak right there of the proposal the first 5 weeks. I want you guys to look at it at the RSI. Look, 1, 2, 1, 2, and then within the right here we got 1, 2, 3, 4, 5 swings. Thank you, DV. And then right there we see that we got this leg that went 1, 2, 3, a 4, and a 5. There is no divergence. So now what I'm looking at it is the previous 4. It's the 30 AO2 counts on the previous 4. Now that's on the weekly. If we take a look at the daily, but let me point you guys out something. Go break the correlation of the safe haven that he was saying. I mean, right here, what you got? 1, 2, 1, 2, 3, 4, 3, 4, and a 5. If you want to look at it like this. I don't like it like that. This is an alternative. I like it like this. When this is the end of 3, when you got, and then That's the end of 3 when we got a flat here, 1, 2, 3, 4, 5, and we are running a flat to the downside. And then that being the case, what is go right here, go, 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 go. This is the count from the top. This is the principle. We got 3, 3, and then we got 1, 2, 1, 2, 1, 2. I told a friend the other day to saw gold right here when he was right here, 1250, 1850. Was clear? No, it was something right here. And the reason that I told him is because it was well correlated with the Aussie. And then it looks like A, B, and then we got 1, 2, 1, 2, and guess what? We need 1, 2, the extended 5 to the 3.236 right there. We should see go higher, lower, higher, something to around the 15 area, 1500 area. That is the previous 4 area right here. And from there, gold should bounce. That's what we like in gold. I don't think that gold top already. I think that 1500 should, and that's this gold with a more downs in the metals. If we take a look at it, again, like everything, it can be 1, 2, 1. I'm sorry, 1, 2, 3, 4, and 5. It looks very like ouncy, but you don't care about it. All you need to care now is from here, sell it for the next low. Technically, from around 1673, 1700, sell it. And it's going to get to 1584 minimum. Any other question, guys? I think that everyone should be ready for the beginning of the week. I think it's very clear what we are expecting. An initial strength in the dollar, but keep in mind that the dollar is due a correction. S&P, I'm looking levels like 64 in oil, S&P around 1080. I see euro 132.80 area. I see pound 152. I see Aussie 196. And then from those levels, you should reset, wait, and see how the bounce comes. If the bounce happens to be in 5 ways, you adjust the counts and you start buying risk. That's how I see it. And do not over leverage the shorts. Very good. No more, because you're chasing a possible wave 5 of 5 in all those pairs. I agree. You do not over leverage the shorts in a 5 of 5. That's a very tricky pair that only been seen in the short time frame counts, that when you adjust the counts on the dailies, on the weekly, you don't see it. So while you don't see it on the daily or the weekly, sometimes you gotta be careful with it. That's my view. Any question, guys? Think everything is clear? I'm favoring more upside on the dollar in the long term. I'm favoring a possible wave 5 extended on the dollar. Very realistic right there. But still, I see one more high on the dollar, and then I recommend a reset, wait, giving either one of these two, the London or the New York session. They're always going to define the counts, and then you attack. But keep in mind that oil needs a new low, and that S&P needs a new low to complete 5 waves. If the bounce happen in the S&P without making a new low, then it's the count when we're going higher to 1258, 1270, even 1300 on the C way. So that's what I say. Let's not outrun the market. We feel confident about the three counts that we have, the three trades that we have right there on the service. I want everyone to be around the computer around 5 p.m. when New York open, when Asia open or the market open for many, uh, because probably we're gonna start entering the first step or the first leg of those trade live. If I see short time frames that the structure I completed. Any other question, guys? It's been an hour and 700 megabytes. The Yeah, in S&P, it should make a new low. You follow me? It should make a new low. One second, let me go to the 4 hour. S&P, you have 1, 2, 1, 2, if it's an S, and another 1, 2, if it's an S. If no, what you have is 1, 2, 3, 4, and 5. That's idea. You make a new low. Even the S&P, it needs a new low right here to complete 5. If you take a look from here, when 1, 2 to the 2618, possible, Rafi. Yeah, very good, possible. Exactly. If this count is what is in place, 1, 2, 1, 2, 1, 2, we're entering wave 3. But the thing is that we're gonna need another nest, because with a new low right here, I'm gonna see 5 wave from here. But I'm gonna see 1, 2, 3 wave from here. You follow me? So what I was telling is that if the new low is denied for any reason, then the next should come in place, because S&P tricked many people, guys. Look, who thought after seeing this that S&P is gonna go here? You see, what I mean is that maybe all you got is you got from the lows A, B, Z, W, A, B, C, W, A, B, let me see, A, B, C, S, and 3 ways down. And then who knows, it collects, who knows if this is recovery, and then that being the case, should trade higher to 1250 again. Yeah. We're still favoring 4 5s in Aussie because no extension on the Aussie trade. We're favoring 4 5s, yeah. So that can be an alternative right there if the recovery in the S&P get uh, get stronger right there. Any question, guys? If no, hope you guys see you guys around 5 p.m. Eastern time and see where we're going from there. But I like it. I like the trades to the one more high in euro before any significant low. Okay, guys. So let's leave it there and get back to you guys later.